Well, as we get ready to kick things off in our daytime session today, we, as usual, like to visit with Rich Nelson of Allendale Incorporated in McHenry, Illinois, and get his thoughts on what to expect in the day's trade. Rich, thanks for coming on board here this morning. As we get ready to open up our daytime session, I'm looking at some notes from USDA here, and we did have an overnight sale this time, not corn, but soybeans. Fairly sizable lot, too. If we look at the details here, it was a total of 250,000 tons of soybeans. They were sold to, wink, wink, unknown destinations, and it was for the current marketing year, the entire total. So no sales of corn this time around, but it all went to the soybeans. Now, if we look at the overnight trade, everything really had a higher bias overnight once again. Let's look at the corn and soybean trade. Corn March was a penny and a quarter higher early this morning at 371 3/4. Now, July and December were unchanged at last check. If you look at the soybean market, we had the March on the soybeans 7 1/4 higher in the early morning trade. 10.45 1/4 was the last trade. July up 6 1/4. And then you have the wheat. Let's take a look at Chicago March. We're up 9 overnight at 472 1/4. July up 6. And then Kansas City wheat, you have the March contract now 8 1/4 higher overnight at 497 1/4. My goodness, it's almost at $5. We have July now 8 3/4 higher at 531 1/4. The Minneapolis wheat overnight on the spring wheat contracts, we have the March 3 1/4 higher. 599 3/4 was the last trade. It did touch $6 overnight. July 5 3/4 higher, and we'll touch on the cotton as well right now on the March contract. 6 points higher overnight at 81.76. Meanwhile, December up 30 at 77.35 cents per pound as they try and narrow up that spread. All right, Rich, I'm hearing overnight that now maybe the weather forecasts have turned drier once again in central Argentina for the next couple of weeks, and it looks. Boy, I tell you what, this Southern Plains area, it looks like it's going to be intensifying in the dryness, maybe.
That sure seems to be the case. And I think what you mentioned there as far as this overnight reaction, it's important to note this is not just a soybean market higher trade. This is a wheat joining in. We noted that the deliveries here with the first notice day, nothing really, that's really overpowering here regarding almost all these grain products. So deliveries came through without a problem. Bottom line, I think right now is, yes, we do have concern about this issue with not just Argentina, but specifically for us in the feed grains. This U.S. market is now becoming a tradable issue because we're now in the key, or getting into the key yield determination for winter wheat up ahead.
You mentioned deliveries, and today is first notice day on all these March contracts on the grains. How were the deliveries this morning? Were they pretty light?
You know, for the most part, there were. Corn, only 25 contracts. Soybeans, 101. Soy meal, only 9. Soy oil, 1786. That was a little heavier, but not too surprising. Chicago wheat, 0. And KC wheat, 134. So numbers light across the board here.
So what do you expect to happen here today? Are we getting into overhead resistance on these grains, or have we now taken it out in some cases?
You know, according to at least our viewpoint, we do have a little higher to go in terms of this corn and wheat market. Big question for us is certainly about soybeans. New contract highs are posted, obviously, within the past few days. And today we're going to be putting up some higher trade as well. So in the short term, we do look for further higher trade in corn and wheat. Soybeans, as long as we still have this Argentina story, looks like a higher trade as well here.
Interesting. All right, we'll come back here in a little bit, and you and I will talk about our livestock trade. That's been a choppy affair, too, this week. We'll examine what to expect today on the final trading day of February when we come back. All right, let's resume our conversation here with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Let's talk about the livestock trade. And Rich, as we get into our final trading day of February, one thing to note, February live cattle go off the board today, right?
Exactly right. So that'd be a noon hour finish for the Feb contract, and most of the volume obviously has already moved over to the April and beyond, but certainly that's something which will be watched here today.
What can that mean to the futures market movement during the day when you have a contract expiring like that? Can that cause some unusual things or not? And then, of course, keep in mind it is the end of the month too.
I think for instance, on live cattle, this is something which would be watched very closely. In the case of hogs, which have a cash settled contract, I think in this case, most people probably won't be that closely watching this one here in this case. So we probably won't see any major trade on the April as far as a carryover movement here today, but something that we'll have to watch it kind of closely.
You know, you and I have been talking for a while now about this live cattle chart on that April contract, which seems to be one of the more popular contracts. It seems to be a very wide-ranging, choppy affair here recently, almost a sideways type market. Do you think it's going to break out one way or the other or not?
We'd look for one last attempt at higher trade here, maybe in the next few days again. And this is something we're still trying to get some sales on for our own selves, for some hedge sales. So it's something we would like to see one or last attempt here. But as we said here, we only have a few weeks left, or a short period left, where we have some tight supplies for the year. Once we get deep into March, and especially into that April, May, it's going to be a little harder to get this market rallying here.
How do you consider the impact on the feeder cattle trade, especially when you have the overall grain markets really lifting here lately? There seems to be a lot more interest on the long side now, of course, being a key feed component there for the feeder cattle especially. Would that have a negative impact on that market?
It normally would. In this case, it's obviously the feeder contract has posted some higher trade as well at the exact same time. Not that out of bounds here, but it does happen once in a while here. Regarding this whole issue, though, on the feeder side, as you mentioned yesterday, we still have concerns about how high feeders can get, because all these far deferred live cattle futures are not implying profits if we have any higher trade on the feeder end of things here.
And on the hog side of things, that has been throwing some head fakes in there too. A lot of folks wondering if maybe there was more downside potential there, but then you may come in one day and then you have it turning around and going higher and throwing everybody a curve. On the hogs, technically speaking, how firm are we here on the technical indicators?
You know, on the charts, of course, we are in a downtrend. That still has not changed too much here, and something we do have to be concerned about. On the bright spot of things here, on a seasonal basis, this market does have a steady to slightly lower trade. But however, this is often the case on these spring markets like we're getting into now, where we have some sideways ranges with some very high highs and high lows, which don't go anywhere once it's all said and done here.
On the beef cutouts yesterday, I see where the choice cuts actually reported by USDA were $1 higher. We had the select cuts up, I believe that's about 7 cents yesterday afternoon. Meanwhile, on the pork carcass cutout values, we had the carcass values going down by 74 cents yesterday. The belly market really took a hit. It was down almost $8, down $7.72, so that was a big drop. Cash hogs were lower. I did hear a rumor, it wasn't published by USDA, I did hear a rumor of some cash cattle sales in Kansas around 126. That'd be about steady with what we had before. So we'll keep our eyes peeled for that. Rich, thank you very much for weighing in on the markets this morning. Good to visit with you.
Thanks a lot. Appreciate your time.
Anytime. All right. Rich Nelson happens to be with Allendale Incorporated in McHenry, Illinois. We're getting oh so close to starting up our final trading day of February. Hard to believe.
Hard to believe. About 6 minutes and 45 seconds away. We'll keep watching that for you. Thank you, Markets Editor Marlon Bowling.